Let me quickly give you an overview of sales taxes before we dig a little deeper. So sales tax is one of many types of small business taxes that entrepreneurs in this country are responsible for paying. 45 states and the District of Columbia, Washington, D.C., all have sales tax. So states basically use this money to pay for budget items like schools, roads, and public safety. And you have to understand, businesses that sell a product or a taxable service must collect sales tax from their customers. So bottom line is what? Sales tax is a tax on purchases of products and some services by states and many local governments to pay for services. Okay, that's the bottom line. And it is basically calculated using a percentage of the price of the item and paid for by the buyer at the time of sale. Though the buyer bears the cost, you as the seller must collect the tax and send the money to the taxing authority. Business owners are responsible for collecting sales tax regardless of the type of business entity. So what types of products are taxable? Well, you have a constellation of products. So generally, taxable products fall into these categories. You have personal property such as clothing, furniture, appliances, and computers, household items such as cleaning supplies, tools and equipment, and paper products, food and beverages that are sold at restaurants and bars. You have utilities like gas, electricity, and phone service, and hotel room stays. So this is actually, obviously, this list is not exhaustive, but it gives you an idea of what we're talking about when we mention taxable products. What types of services are taxable? In general, most retail goods are taxable, but taxable services are more narrowly defined by most states and local taxing authorities. Taxable services typically fall into these categories. There are 6 of them. You have services related to personal property, such as equipment repair and installation services. You have services related to real property, buildings and land, such as landscaping and painting. You have digital and information services, such as subscriptions, databases, and stock reports. Business services like credit reporting. Personal services such as tanning salons, hair salons, and pet grooming. And recreation and entertainment such as concerts, sporting events, and amusement parks. Again, here, this list is not exhaustive, but it gives you an idea of what's taxable. Always, you can inquire with your local taxing authority to have a clear idea of what's taxable, either as a product or service in your area. Now that we have a clear idea of what the sales tax is, let me give you the steps you need to follow right now if you want to pay sales tax for your small business. First, we have something called suitability. You have to determine if a sales tax applies to your product or service, okay? And the thing here is that state laws vary pretty significantly in terms of which products and services are subject to sales taxes. And the thing is that there are some states in the union that do not actually impose sales taxes at all. For example, if you sell only in Alaska, Delaware, Montana, New Hampshire, or Oregon, then you don't have to pay statewide taxes, though Alaska and Montana allow localities to charge sales tax. So very important, first determine if a sales tax applies to your specific products or service. So when we actually think about the analysis here, we have to think about 3 things. You have to think about geography, so where you live or where you do business or the people you sell to. Do they have to pay sales tax? Number 1. Number 2, what is the product or service? And number 3, what are the requirements of the local taxing authorities where your business is located? Okay, so one thing I want to say very clearly here is that sales tax apply to online sellers. Many online sellers have to pay sales tax in the wake of a 2018 Supreme Court decision, South Dakota versus Wayfair. In this case, the Supreme Court decided that states can require online sellers to charge and collect sales tax even if the seller does not have a store or other physical presence in the state. Okay, after Wayfair, 24 states require e-commerce sellers to collect and pay sales tax. Fortunately, most of these states exempt online sellers that process fewer than 200 internet transactions of $100,000 in sales each year. So this is really important. So if you're selling online, by the way, if this applies also if you're selling digital products. So sales tax laws have had to evolve as internet streaming becomes more popular and more people consume media and television online. So the majority of states now tax digital downloads. So this includes items like downloadable books, e-courses, and digital music files. Okay, and so when we talk about the rules for internet sales, please, those rules keep changing all the time, please. So I want you to contact your local taxing authority to have a clear idea of what's applicable in your area. Okay, so and also you have to make sure that whatever service you actually provide, those services are taxable or not. Step number 2, registration. So number 1, you actually have to determine if a sales tax applies to your particular product or service. Step number 2, you have to register for a sales tax permit. By the way, I want to remind everybody of today's topic. We're having a conversation about how to pay sales tax for a small business. Step number 2, you want to register for a sales tax permit. The thing here is that you have to register. See, those things happen at the local level. You have to register with the taxing agency in each state where you must collect sales tax. Not just one state, each state. You must register with each state where you are selling before you can begin collecting taxes. Depending on the state and what you sell, you might need a seller's permit and or sales tax permit. Typically, you will need to provide your federal tax identification number, also called EIN, and your NAICS code, or codes for the products or service you sell in order to register. Okay, very important. Now, do you have nexus? This is an important concept I want to introduce here. Sales tax nexus is basically the business connection between a seller and a state. On its face, nexus is seemingly simple. If you sell products in a state, you must remit sales tax. However, the thresholds that trigger a nexus obligation can be nuanced, and it's important for small businesses to understand their obligations before they experience growth. The first step is to actually determine if your business has nexus in states where you do business. Nexus requirements are different for every state and consider physical presence, that's what I was talking about earlier, geography, economic nexus, transaction thresholds, and other types of business-related activities that may qualify. And it's always better to actually contact your local tax authority to have a clear idea of what's applicable in your area. And you also have to think about, are the goods sold for resale? If so, your customer will need to provide a valid resale certificate. And a resale certificate is basically a signed document that indicates your customer's plan to resell the goods or products you've sold to them. And usually this comes into play if you work as a wholesale dealer and are selling to retailers. However, manufacturing and construction industries also generally require resale certificates if the supplies are used in a product that is built and ultimately sold. Okay, and an LLC has to pay sales tax anyway. Okay, so an LLC is not exempt from collecting sales tax on products or other tangible personal properties sold in the various jurisdictions where it does business. Step number 3, calculation. So we're having a conversation here about you need to calculate the sales tax rate. And the thing here is that the sales tax that your company must charge depends on where you sell, right? If you sell in multiple states, you need to calculate and collect the tax in each of these states. And I want to say one thing very clearly. Please always consult with the local tax authorities so you have a clear idea, because the whole thing is that rules change all the time, laws change all the time. A sales tax is a budget measure. In other words, it's a budgetary tool that local taxing authorities use to levy taxes to actually raise money, right? So make sure if they change the rules, make sure that you are basically in the know about anything that's going on. Now, when we talk about sales taxes, the rates in the country, you have some states there that have a high sales tax rate and others are low, right? In the union, as of the date of this show, Louisiana state, the rate is the lowest at 4.45%, and California actually is the one of the highest, okay, at 9.52%. Okay, this is really important. And one thing I want to say here is that you have to really understand what really works for the specific area where you are at, okay. And one thing you need to understand here is that you got to really have the conversation about origin or destination. Which state's tax rate applies? Now, most states use what's called a destination-based tax, meaning that the tax rate for the state and locality where the customer receives the goods is the one that applies. Okay, so let's say you actually shop in Florida and you sell to a customer who asks you to ship the merchandise to Georgia. You would be required to charge sales tax based on the rate in Georgia. But anyone who made the purchase at your store and worked out with it would pay the Florida tax rate. So this is what I want you to really understand. And so you have to also think about the sales tax nexus that I just spoke about earlier, right? And so it's all about, again, going back to the local taxing authorities and asking them clarification if you have any question or comments. Number 4, collection. So you have to collect the sales tax at your point of sale or checkout cart. I just want to remind everybody in today's conversation, here is today's topic. We're all talking about how to pay sales tax for a small business. Okay, so step number 4, you have to collect the sales tax at your point of sale or checkout cart. And it's really important and I'm only talking about checkout cart because we are introducing the concept of electronic sales, right? So one thing I want to say here is that your invoices or receipts should list the amount of tax separately from the purchase price. Some states require you to file reports on the taxes you collect in addition to remitting the funds. So if you only do business in an origin-based state and you have no online sales, you might be able to track the sales tax you collect manually. But most businesses will need software such as QuickBooks, Wave, Xero, Expensify to track the sales tax they collect. And the thing here is that once you have begun collecting tax, you will need to document the sales tax collected on an invoice and it will need to be filed with the associated tax jurisdiction based on the sales tax due date and filing frequency set by each state and local taxing authority. Okay, and the thing is, this can actually differ from state to state and can range from the middle to the end of the month unless you qualify for a reduced filing frequency. In some instances, a sales tax return will need to be filed even though your business did not collect sales tax during a specific filing period. It's all about the requirements for each location. Okay, even if your business was not active during a period, most states will require a return. And failing to do so will actually result in a minor financial penalty, but in some cases can result in having your sales tax license revoked. Okay, and once you have actually aggregated your sales tax based on the requirements for each return, you are ready to file your sales tax return. Okay, and how you remit your tax will be different depending on the geography, depending on the state. And while some have simple filing options, which means merely figuring out how much sales tax you collected from buyers in that state, others will require you to break down the tax you collected by other geographical areas, such as city and county. Step number 5, let's talk about remittance. So you have to send the sales tax return and payment to the state. Actually, this makes sense, right? It's not your money. You actually collect the state actually just rely on you to collect their cash for them, and you have to remit the taxes. Okay, so you have to submit your sales tax return to the state along with the actual payments you have collected from customers. If you use accounting software like QuickBooks, Xero, Expensify, Wave, you can set it up to have sales tax payments automatically post to a separate account. And due dates, as I just said earlier, what happens here is that due dates for filing sales tax vary a lot based on which state you transact in. And the deadline usually falls on the 20th or the 25th day of after the reporting period ends. Some states require you to report and pay sales tax each month. Okay, and whereas others are on a quarterly or yearly cadence. It depends on what kind of rhythm you have with them. Often, and also it depends on your transactional history with them. And often, the reporting and payment schedule is more frequent for higher volume sellers, right? Again, going back to what I said, transactional history. Fortunately, most states make it possible to report and pay your taxes online. And the thing here is that even if you have no transactions during the reporting period, you should still submit a sales tax return in any state where you have a tax permit. Failure to do so, again, as I said earlier, could actually lead to your sales tax permit revoked. You don't want that, right? So this is really important. One thing I want to say here is that it's really important to make sure that you go back to the locality. So we're talking about the state, but also what about the local tax laws? Okay, and there are some sales tax exemptions, and how you need to know how to handle them. So besides products like let's say food and prescription drugs that might be exempt from sales tax, certain types of buyers might not be required to pay sales tax. Right? I spoke about that earlier. Resellers may be exempt from sales tax. So it's up to you to really know which criterion qualifies in a specific situation. One thing I also want to say before closing this section is that you have to constantly be strong when it comes to paperwork. Record keeping is really important because states do audit. They do actually perform audits when it comes to sales taxes. Step number 6, I want to talk about the pitfalls. Okay, what are some common compliance pitfalls for small businesses? And this is really important now. The thing is that, and this is what I just started talking about earlier, record keeping is really important, but there are some other issues that you need to pay attention to. For example, falling behind. So falling behind on sales tax when it comes to the legislative updates in various states is a concern for many small business owners. And if you are doing business in multiple states, it can be a monumental task to make sure you know about and understand tax legislation when it gets passed. And breaking down rates. So inability to break down rates required by a tax jurisdiction can also be an issue. So sales tax rates include the state rates plus any local or other taxing jurisdiction at the point or destination of sale. So knowing how to navigate the increasingly dense tax rates and the ability to track and ensure compliance across your business is critical to success. You also have nexus. So you need to understand nexus. So neglecting to collect tax where you have nexus will quickly become a problem. So the first step is understanding and identifying where and when you have a nexus and how that will affect the amount of tax you must remit to the individual state rather. And what about exemption certificates? So failing to collect exemption certificates on exempt sales is a common problem. In most cases, asking for an exemption certificate immediately is the best course, but it does cause extra work for both you and your customer. However, having the completed forms is necessary and expected during an audit. And during an audit, and as I said, states do routinely audit businesses for their sales tax procedures. So how do you actually manage sales tax questions successfully? Well, it's very important to understand you want to be organized, right? You want to save time. So when all of your info is in one place, it saves you valuable time. You want to stay organized. So gone are the days of managing multiple stacks of paper, hoping you'll remember to file the one you need in the exact moment you need it. So you can actually use tax software to help you do that. And you want to constantly lower the risk. So you want to see a problem. You want to see a problem before it becomes a problem. So this is why, again, you need to have the right procedure in place to make sure that you are able to identify and mitigate risks as they arise. Let me talk to you about some sales tax myths and misconceptions that a lot of folks are just talking about, and I want to clarify those today because I want to debunk those myths so it's pretty clear to everyone what we are really talking about. So the IRS will audit me if I don't collect sales tax correctly. Now, many small businesses, especially the owners, they think their business will face an IRS audit if they don't collect sales tax correctly. But in fact, as you probably understood from this show, the IRS has nothing to do with sales taxes. Okay, so the IRS is our national taxing administration, but sales tax is governed at the state and local levels. So there is no national sales tax in the United States. What about if I only sell online, so I don't have to collect sales tax? That's totally wrong. Remember, I just said The Supreme Court had a case called the Wayfair case. So if you sell taxable items and have sales tax nexus in the state, then you are required to collect sales tax from your buyers, no matter if you made the sale face-to-face or online. And I only have to collect sales tax from buyers in my home state. No. And long story short, in the United States, online sellers are only required to collect sales tax in states where they have a sales tax nexus. Okay. Now, nexus means a significant connection to a state, but generally you have to collect sales tax everywhere. If I did not collect sales tax, I don't need to file a sales tax return. No, you definitely have to file, because it's all about, that's what we call informational return. You're trying to really stay compliant. If you don't, you might have your sales tax permit revoked, and I should charge sales tax on everything I sell. No. Again, it's all about making sure that you actually talk to your sales tax authorities, the local tax authorities, to see what applies in the jurisdiction where you do business. Okay, and so it's all about, again, when we talk about sales tax in general, and I think I've made clear during this conversation with you, I've made clear that everything happens at the local level and at the state level, whereas all the federal income tax compliance rules actually happen at the IRS level. When it comes to sales taxes, everything happens at the state and local levels. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to pay sales tax for small business. So we spoke about suitability, registration, calculation, collection, remittance, pitfalls, and myths. Thank you so much. God bless you. I'll see you next time. But until then, remember, stay marvelous.